welcome everybody to our podcast, second ever. This is going to be really professional and tight knit, so don't worry about that. Let's just kind of introduce ourselves a little bit. Me and Eric started, I guess 2017. Was our first Dunkin' Donuts meeting. There was this little tiny Dunkin' Donuts. We rented out. There was like a conference room, rinky-dink conference room. We're fumbling to get things on like the HDMI screen. Eric had this great presentation about we need to think big, and I was like, I'm immediately in. And then we got our first property in Seba, as you know, Corey.
Yes. No, actually, the first property was West 9th.
West 9th, yeah.
West 9th, yeah.
But that was him.
Oh, just Eric, got it.
Yeah. But our first property actually under the umbrella was Seba. And then a couple years later, my best friend from college, John, who's on as well, was like, virtually, yes, not present in the room. He had been following what we were doing, and John, chime in anytime you want. And he said, I'm in. So that's kind of how we got to, our team now. And we kept evolving. We kept learning, eventually graduating to 10 units in San Marco. And, that's kind of where we are now, looking to take that next jump. I wanted to stay very brief with our intro because we have Corey Clarkston here today, and we want him, we want to share his story and kind of give the listeners a little taste of all the expertise that we have gotten over the last 5 or 6 years. So, Corey, why don't you introduce yourself and, tell us a little bit how you got into the real estate game, the commercial side of things. And
yeah, absolutely. Yeah. Well, it's a pleasure to be here with both of you guys. You guys have a lot of great energy that you bring to everything that you do, so this is going to be a lot of fun.
Thanks, bud.
I got started in real estate 2016, 2017. I was working for a law firm doing IT and going to school, and then I had an opportunity to go join a private equity firm, and they were doing real estate. So jumped over there, not knowing anything really about real estate except for, hey, I have a place that I rent. Yeah. I don't particularly care for my landlord, but whatever. But I got started over there primarily doing single-family home sales, and then we did a lot of property management. So my role was really to try and grow our property management division. And as that continued to grow, then I took on more sales roles. And that's how I got linked up with Eric, I believe, on Bigger Pockets.
Can we say the name of the company that you were working for because of what kind of like went down in the end? Can we talk about that?
Yeah, we can talk about it a little bit if you guys want.
That'd be interesting.
Yeah. It's a fun story. I don't think there's anything barring that conversation at this point.
Company X, we'll say.
Yeah.
There's no bankruptcy proceedings ongoing.
I'm not super sure. I try to, my name is clear, so that's, I did the right thing, so that's what I was focused on there. But,
exactly.
Eric and I got linked up, and I think it was Rocco on Eric's profile or something like that.
Or you on mine. Yeah, I remember that was like the first purchase we made as a company.
Really?
It was like the $300 Pro Bigger Pockets.
And worth every penny, right?
Oh, yeah.
Because
absolutely.
At least then, I thought the platform had a lot of great information.
Yeah.
Some of it now, I think it's a little bit too over-marketed. And it's
right.
Got a lot good spot to start.
Exactly. And that's how I found like my first 10 or 15 clients was just on Bigger Pockets, like reaching out saying, hey guys, I'm an agent in Jacksonville. We've got, turnkey stuff. We've got value add stuff. Come down, have a conversation with us, talk to us, see what we can find. And then we found you guys, or Eric, I guess, West 9th Street. He said he was trying to get into multifamily. Well, 2 units technically, I guess. It's not commercial multifamily, but it's a start. And it was a great project. We renovated that little garage apartment and that huge house. I mean, it's an absolutely gorgeous piece of property.
Yeah.
Got a tenant in there. I think I don't know if it's still the same tenant, but
same tenant
from 4 years ago.
Yeah, and he rents both sides, like the apartment.
Oh, that's great.
Yeah, and so like I don't even think anyone is living in the garage apartment, to be honest. I think he just wants it for himself.
Yeah. So no damage being done in there right now, so you're just collecting free cash flow on that.
Yeah, that's amazing.
It's a great property. And then we got you guys into Seba, which was another single-family home, kind of building the portfolio up. And that was a quick little purchase in and out. I think you guys turned it over pretty quick after buying it, right?
We doubled our money in like 12 or 13 months.
Yeah.
So that was
It was
nice.
a quick project. I think we identified it quickly. We got you in, got the construction done very quickly, and got you out. I mean, that's the goal, right?
Yeah.
You want to double your money.
Yeah, let's get so.
I always joke. I'm like, the first daughter I have to name her Siba because that's where everything started.
We saw like a license plate. We saw a license plate that said Siba once, and we were just like, I think that's where it clicked. He was like, I'm gonna name my daughter Siba.
Yeah.
It's like, oh, whatever.
There are worse things to name.
Whatever. Yeah,
right?
Sure. It's
I guess.
kind of creative. I guess.
Yeah.
Daddy named me after a $50K house. That's terrible. Not even like a mansion.
That is terrible.
A $50K
Yeah,
house.
just kind of Class C property in Jacksonville, Florida, on not the best
But
neighborhood.
2X.
Exactly.
Yeah.
Exactly. But while I was there, we did worked with you guys, tried to put you guys in touch with other investors as well, which I think you guys still have conversations with. Did some 20-unit buildings, some 40-unit buildings, mobile home communities up in Amelia Island. Those were a trip.
Yeah.
And kind of led me to where I am now. So I'm the operations director for a small company out in New York. They own about 500 units here in Jacksonville and always looking to grow. So if any of your listeners have something in Jacksonville they want to get rid of, RV park, land, mobile homes, apartments, single-family homes, we're interested in it all.
Yeah.
But so my primary role has kind of shifted from the sales and property management side to just trying to keep trains on the track for the portfolio that I'm working with now. And it's a trip every day. I mean, real estate's just a fun. It's hard to even call it a job, right? Because it's a job.
It's art.
But it is an art. It is an art.
It's creative.
You got to bring the owner together and the tenant. Neither are ever happy with the guy in the middle that's just trying to take the phone call and solve both sides' problems. But it's an interesting day every day, and especially like my primary focus has always been in Class C affordable stuff, as you guys know, and a lot of your new stuff is in Class B, Class A, kind of historic stuff.
Yeah.
But Class C, man, it's a different ballgame. And I thought that when we were dealing with apartments, and then we got into mobile homes, which is a totally different ballgame in and of itself.
Yeah.
So it's fun every single day. I get to talk to interesting people. The guys I work with are all fantastic. Still get to have conversations with y'all. So it's real estate's great.
It's different every day. If you want a job to not sit at a desk, I mean, real estate's fantastic. Again, way different from A class to C class.
Gosh,
It's like being like a like little suburbia cop versus like an NYPD. You're dealing with like.
Yeah, I changed my boots from the mud-caked boots I was wearing when I got out of my truck. I was like, I should probably not track mud into this place. So, no, it's definitely a little bit different, but it's fun every single day.
Yeah.
Let's go back. Let's start from the beginning a little bit. Let's talk a little bit about when we met. The company you were working for. We don't have to name it. I don't know. Let's just leave it out. It's fine. Yeah. It doesn't matter. But I want to hear a little bit of your take on your experience, like what it was all about. We don't have to name any names, like I said, but let's do that. That I think that would be interesting. So try to paint the picture for that.
Oh man, it is a difficult picture to paint, but I think the biggest piece of advice that I would give people coming out of that, and then we'll jump to the backstory of it. Just know who you're operating with. You really trust your partners. Make sure that you're making good financial decisions together as a team. If you're working in a partnership, which I think is fantastic, just make sure you trust who you're working with. But the company I was with, so when I came on, we had about 120, 150 units under management. We ballooned up very, very quickly without a lot of managed growth.
Leveraged?
Yeah.
Not even leveraged, just the number of units under management went from 120, 150 to 1,000 within 6-7 months, which was great.
Oh, wow. I didn't know it was that high.
It was pretty quick. And then at the peak, it was 16 or 17, somewhere in there.
Yeah.
But just the growth level was so quick. And the team that was there, a lot of smart people, but not knowing the expertise of what they were trying to do. So, for example, they took over, a 200-something unit multifamily building. Everyone that was previously working for the property, gone. Yeah. Hey, we're going to bring in our own team and do it our own way, which is fine. But the amount of knowledge from that property specifically, which had a lot of skeletons in the closet, just gone. Your maintenance people, the admin people, the people that have built relationships with tenants, gone.
Right.
So just a lot of bad business practices that went into that, and a lot of bad personnel decisions. And then
whose idea was that? So that was a group idea, kind of just
So at that time I wasn't really working with that client, so I don't know what went into it. I just heard about it, and I'm like, guys, I don't think that's the best idea that I've heard come out of this office, but you guys do you.
That's what.
Right.
Yeah, and so I was trying to, mainly focus on investors and the smaller stuff. But and it's just make sure you're auditing like all your owner statements. Make sure that you're checking and making sure that your distributions are coming the right way. That your investor relationship manager is contacting you and telling you what's going on. And just make sure you have, even if you're an out of town investor or even if you're in town and you use a property manager, just stay on top of them. Like it's so important to just check in, because the clients that I worked with, like my goal was to talk to them at least twice a month plus on owner statement. Like that's 3 touch points a month. They always know what's going on. You always have to know.
Yeah. I mean, even right now, me and John go through, our statements, probably in a monthly to quarterly basis.
Right.
Obviously, to record everything on the accounting side, and we always, have a question or two, John, on some charges, but.
John's not coming through well.
Yeah, I don't think you're coming through too well. We'll try to fix that. I think it might be the phone volume, but we'll figure it out. But in any case, whenever we have a question, we go directly to Ron, and he'll get back to us. Hey, this is what it was for.
Exactly.
If you want like a more detailed invoice, I'll reach out to the vendor. No problem. All transparent. And
you want to be as transparent as possible. Like I remember when I was working at the law firm, one of the ladies in HR messed up a shareholder's bonus check at the end of the year.
Yeah.
Very large check, right? By 1 penny. And he freaked out. Like he came unglued.
That's Rocco right there. Not freaking out, but noticing the penny.
But it's important because if you got the 1 penny wrong, what else are you getting wrong along the way? So it's just, you got to stay on top of it. And real estate, if you want to invest in it passively, there are definitely plenty of ways to do it, like investing through you guys. You guys take care of everything, send the investors their money, and you guys are doing all that double checking. But if it's just you owning one property or one building or whatever it is, like you got to just be on top of it. Talk to your property manager, talk to your team, like make sure you always know what's going on, because that's the only way you're going to be able to get bigger and better is if you systematize all that stuff.
Yeah, and I think I'm working with you guys, like more directly with you. And when we bought West 9th, the duplex, I obviously was doing well. Everything was great, but I did see when trying to scale, I noticed that like there's more than just the passive income, right? Like somebody wants to buy a duplex, somebody wants to buy a home and rent it. It's like, that's it, right? Passive income, mailbox money. Right? I never think about it. I'm like, I buy the duplex. I'm like, this really isn't mailbox money. Like there's finances behind this. There's spreadsheets behind this, even at the small level. And I'm just like, I remember like kind of re-engaging with Rocco. We were together already at that point, but I remember re-engaging with Rocco. I'm just like, Rocco's expertise is finance. Like that's his thing. He's an accountant. He knows his stuff. Like I need him to be on top of these things that I'm not great at in order for us to then continue to climb. So like
exactly.
And with the whole situation where that company, whatever, we can talk about what happened, I noticed even more so we had to stay on top of it. And you know what? When things go wrong, I always see like somebody who works for a company and they don't love their boss and they talk about all the things their boss is doing wrong. It's like, okay, so then go start your own company with all of that knowledge.
Right.
And do it better. Like, so like that was a good experience for me to be involved in, and I got out unscathed.
Yeah.
And you as well, and maybe go from there a little bit of like what it taught you and what happened?
So
what happened?
I really questioned whether I wanted to be in real estate after that. I mean, it was a dogfight just with everything that went on and just litigation or whatever you want to call it, and still just trying to make sure everything is smooth afterwards. And I kind of questioned it for a little bit. I was also getting married. We got engaged.
You had a lot going on.
Yeah, there was a lot going on. We got engaged right before the pandemic really started. And then the pandemic started, the company went to hell in a handbasket. Yeah. And then it's like, guys, like I'm done. I don't want to do real estate. I don't think this is for me. I did some brokerage stuff because that's what I had. And it's like, I'm getting married. Like I need something going on. So I got out of real estate for a little bit, realized maybe property management wasn't exactly what I wanted to do anymore. And then I brokered a property. One of the former clients that I had worked with said, hey, I have this small mobile home park, off Phillips Highway here in Jacksonville. You think you could find somebody that would be interested in it? Like, yeah, let me take a look. And then had, 50, 60 different conversations with investors. And then these guys from New York that I work with now at Rise Communities, they had been in my database for a long time. I actually found them on Bigger Pockets like 2 years before we even made this sale. Called them up and said, hey guys, I've got this property. Is it something that you would be interested in? And they said, yeah, absolutely. So we got it under contract. The closing was just a nightmare. Mobile homes, if for anyone that's not listening, you have all the standard stuff that you deal with, like with a multifamily transaction. Yeah. But you're also dealing with 20 different roofs of a multifamily building. Yeah. And it's like single family plus multifamily. You're dealing with the DMV, which everyone knows is already a pleasure to deal with. Yes. Because you've got titles, registrations, the property taxes are different. It's just like a different animal. Yeah. So this 3-month contract stretched from, we were supposed to close, I think, the day before my wedding, which I thought, great, I'm going to go on my honeymoon. I'm going to have a nice commission check. This will be great.
All done.
And then, so that was September. It should have closed on September 25th. Didn't close until February of the following year, just because of all the title issues and everything that we were going through. So we get close to closing. The guys that are buying are like, hey, we're closing on about 4 or 5 other properties, ranging from, 1 unit to 10, 15, 16 units. Anybody that would be interested in managing it or working as a kind of operations guy on the ground. Yeah. And I thought to myself, I don't really like property management, but I really like you guys. Yeah. And you guys are a different type of operator than what I had worked with in the past. So sign me up. Let's go do this. And that was 2 years ago, like last week or the week before that. And just expanding with them now for the past 2 years. I mean, we went from 40, 50 units to like 500 something today. So, and it's just been a pleasure, truly, like working with the right people, the right team that have different strengths, like you guys talked about. Rocco, you're on the finance side, and Eric, you're kind of on the deal and investor side. That's how our structure is. Like construction and finance, are divided up amongst 2 people, and then it kind of comes down here, and like we put the plan into action. Yeah, like they're calling the play. We're the quarterback on the field. Like, hey, let's go put it into action, report back, and see where we stand, and we'll analyze and come back on the next series and say, hey, we can do this better. Yeah, yeah. No, that's great. I think when you're operating, especially in like a smaller operation too, everyone always wears all hats too. Exactly. It's just nice to have, everyone with their own area of expertise. Because at the end of the day, any one of us 3 can post on social. Any one of us 3 can talk to an investor. We're all very personal and outgoing. We bring a lot of good energy to a conversation. But having those kind of, I'll call them anchors, to really, be a source of advice and kind of guidance for the business is so important. Exactly. Like you all want to have knowledge, like a general working knowledge of how every part of your business works. Oh yeah. But if one of the partners is super experienced in construction, and the other one's super experienced in accounting, okay, well they come together and we found out the most efficient and cheap way to renovate a property. And they, the finance guy might think of something that the construction guy doesn't think of in a construction project. Like, hey, why don't we try, this type of trim or this type of flooring or whatever it is. Like we made a transition from doing luxury vinyl plank into just the vinyl sheeting, because the accounting guy saw it in the store and was like, hey, we're having to replace these planks all the time. This is much cheaper material. Why don't we go with this? Construction guy, I hadn't thought of that before. Let's try it. And that's all we use now. So you got to play to your strengths. Can you start from the beginning of when you started working with them, their portfolio, what it consisted of specifically, and like what the direction they wanted to go in and where they headed in? Yeah. Because like when you grow, obviously you're pivoting and right. You're all over the place. Yeah. So. I mean, I guess was mobile homes always the direct focus, or was like a stumble upon like, oh my God, this is a great, lucrative area. Let's get into it. Yeah, so previously to working from them, I had done a little bit in mobile homes, mostly like purchasing a portfolio for an investor and then helping them stabilize it, and then they sold it off to a company that actually bulldozed them all down and built single-family homes on top of the lots. But they're doing very well, so I think they're okay. Yeah, whatever. But when they came in and they were in the Jacksonville market, they were targeting mobile home parks specifically, but apartments, anything that can rent out. Really is what they were going for. Yeah. So the initial thought was as many mobile homes as possible. Picked up a 16-unit apartment building, an RV park, which is just a phenomenal asset that, if you guys want to talk about that more, we can. But a great asset. But the mobile homes was the primary target and continues to be the primary target just because we find that it's just a great asset. I mean, we really enjoy working in it. Now, it does have its pain points like the titles.
Yeah.
These things were all made in the 1970s. So the VIN number that's on that's supposed to be on the trailer somewhere has been painted over 16 times. It's fallen off. It's rusted. So then you got to figure out with the DMV, which is always a lovely process, how to get the title back in your name. And it might not have even been in the person that you bought it from's name to begin with. So you got to trace it back, and it's interesting, but it's a great asset class. The pivot is always just what's a good deal? What can we make better? What can we
in any asset class?
Yeah,
pretty much any asset class. We primarily focus on affordable housing, just because we think that's in any kind of market. Affordable housing is always going to be necessary. If you're in an up market or down market, people are always going to need a roof over their heads.
Affordable market being C class.
C class.
Of any
correct.
kind.
A C class of any kind. So mobile homes, apartments. Yeah. We don't do a lot of single family homes. We're really trying to focus on larger assets, try and condense what's the word I'm looking for? Trying to condense everything down into hey, if I can have 5 guys working on one property at one time, that's better than having 5 guys spread across 10 properties.
Sure.
But that's where we're trying to get to.
Yeah. What's kind of the difference, or I should say, when you're looking at apartments or a complex, I guess the cap rates are between hopefully they're going up now, but between 4 and 5. What do those cap rates kind of look like on mobile park homes? Is it similar, or is it probably a little higher of a return?
It's going to be a little bit higher because you're dealing with a higher level of risk.
Yeah.
I mean,
is that because of the C class, or is that because of an added type of risk?
It's a little bit of both, right? Your cap rate's going to be higher because you are taking on a different level of risk. A mobile home just is a totally different animal than a single family home as far even your insurance, the maintenance, everything on it operates just different enough to make it worth the risk and worth the investment. But the cap rates, I don't discuss that a ton because I'm not on the active acquisition side at the moment.
Yeah.
But I do know that they've compressed a lot, but I think they're going to open back up hopefully in the next few months.
For all asset classes, we're hoping.
Hopefully for all asset classes, which would be nice. But I think hopefully we're going to get some sort of market correction. I've been telling you guys this since the start of this upward trajectory that we've been on. It's guys, it's got to stop at some point.
Yeah. But I don't know if it has to stop, because I think we're in this debt cycle at this point. Just not to get off of multifamily, but to talk finance and the Fed. I think the Fed has almost made up their mind that they will not let this crash beyond a certain point, because they can't. Because they're now at risk.
Exactly.
So I don't know. Maybe it's an infinite bull run to infinity. Dollar equals nothing. All assets shoot up till.
That would be interesting.
It's a scary thought, but that's a whole nother conversation.
Terrifying for
that's
sure.
That's a whole nother conversation.
I think the toughest part is, you look at the supply-demand model, and the supply is just not there. No. For what the demand is.
In all housing.
Ever.
In all kinds of housing. And you can't build it fast enough. I mean, you cannot get the material into your distributor like Lowe's, Home Depot, wherever you're buying, Builders First Source, anything like that.
Yeah.
To just go build the house. And what's a sheet of plywood cost nowadays? I mean, and you can't build anything without a piece of plywood and 2x4s.
I think it's, my dad tells me this all the time. So as you know, my dad's a GC. So, it's like... It's he was Douglas fir 2x4 is $10. It's ridiculous.
It's insane. And the other problem that I feel like we're going to have to address at some point is in some of the bigger luxury Class A developments where you've got Walmarts and Targets built into single family home developments and stuff like that. Like you see a lot in St. John's
central
County.
Planned.
Central planned or urban planned communities. I can't remember the exact term. But where the developer is passing on the utility infrastructure cost to the end buyer through a special tax or something like that. So you're just continuing to put it on the consumer, which you have to do to some degree, right? Because the business has to make money to continue to develop and do things. There's got to be some break somewhere in this cycle but maybe there doesn't have to be, because everyone is still building an insane amount.
It's crazy.
Right.
It's
and
crazy.
at home, it's interesting in New Jersey, different dynamics than Jacksonville. It's probably super densely populated up there, less here,
Right.
but still populated here. You see like lots of land. You're either putting up a high rise in that lot of land because of how expensive it is, and the only way to make the money is to put 300 people there.
Right.
Or you put a $6 million home that costs $2 million to build because now there's profit. Any like affordable type housing, it doesn't pay.
No.
The land's too expensive. You can't make it work. The construction, like you said, costs too much money. And now you can't sell a $400,000 home on a lot of land that costs you $1 million to build.
No,
so it's like there's something.
There has to be
break.
something. And I think like the next great crisis in America, whatever you want to call it, it's going to be housing. And it's already a crisis. It's already at a really bad point.
Yeah.
But whoever can find a way to come in and make huge affordable housing developments for the average American, I think if they can find a way to do it affordably and make a good profit on it, then they'll kill it.
Yeah.
And I'm sure there's someone out there that's doing it that's just not coming to mind.
Yeah.
But that's the key, I think.
Yeah.
Yeah. And I think now, I mean, we're ultimately heading to a renter nation, right? And it's difficult, seeing even some younger cousins and stuff, like they're going into college, and when they get out, like, what is a regular starter house going to be $1 million?
It's insane.
So like they're going to have to rent.
That could be though, the renter nation concept could be the Band-Aid on the issue, because okay, nobody can afford it. Fine, let me just whatever big company, Blackstone, right? Like buy them all up and then give it to us cheap, and you can take the losses because you still benefit. Like maybe that is the renter nation is like where it's heading, because that's the Band-Aid.
And I mean, a lot of these developers too are building like these apartment communities. They're not building neighborhoods of single family homes. Maybe some are, but I think the majority are going to those rural communities like you were talking about. Back home, the Pier Villages, or here, what's a good example around here?
You've got a bunch of apartments going up, like in the Durbin Creek area.
The Brooklyn. Perfect. The Brooklyn. Yeah. So like communities like that, the lofts, like that whole Riverside area, that's kind of what we're also seeing in Jersey. So
Right.
I don't think it's probably much different in Austin, Texas, or something like that, where, that's kind of where we're headed.
For sure.
Because these developers are not stupid,
and it's finance. Like the numbers and numbers.
The numbers don't lie, right?
It works for them.
What the best factor in real estate investing is number of units, right?
And and also like you said, demand.
Exponential compounding,
and also demand. People actually want that.
Yes, yeah.
It's like the pandemic sent everyone out into suburbia, and it was like great when you never had anything to do, and now like everyone's going back, and they're like, wow, I really don't like that. I want to get back into the cities.
It. My wife and I went to Atlanta this past weekend. There was and she went to Dallas the weekend before that, and she said there's a lot of these new development types of places where everything is kind of centralized and built around one, like a movie theater or something. Jacksonville doesn't have something like that, where you've got a movie theater and 20 restaurants around it that you can park, have a drink, go see a movie, go bowling, whatever it is.
Yeah.
Like, we don't have a ton of that, and I think those developments would do really well in a place like this.
Yeah.
It's just a matter of somebody's got to grab the bull by the horns and do it.
Don't they have like a centrally planned Nocatee down near St. Augustine? I saw something like there was like centrally planned like.
Yeah, there's a little bit of a community down there. I've toured it like once or twice, looking at different houses, so I don't have a ton of experience with it. But it's got like its own centrally. It's like, we call them golf cart communities. Honestly, like you can hop in your golf cart and you can go to Target or Publix, do your grocery shopping.
That's
and then
pretty cool.
It sounds
That is cool. That would never happen in New Jersey.
No.
Well,
There's not enough space
there is out west, but like where people
in the Pine Barrens,
no,
hanging out with the Jersey Devil. Like no,
nobody wants to be there. But that's the point of the centrally planned. Also, is to be like, okay, you're away from like the cool stuff, the cities,
but you still have something to do.
But there's you have now a city that has been created for you out in the Pine Barrens,
exactly,
like in the middle of nowhere.
Well, and I'm
Sorry
sure it's
if
like
you're
this
from
where
the Pine Barrens.
Well, I'm sure you guys have something.
Nobody's from the Pine Barrens.
I don't know where the Pine Barrens is, to be honest.
They don't have New Jersey. They don't have phones. Like they're in the swamps. The Jackson
swamp
Whites,
people.
Remember?
There's swamp people in Jersey.
Yeah.
Okay.
Just like legends.
Doing a lot of gator hunting in the swamp.
Yeah. Oh my gosh.
Oh my God.
But yeah, no, definitely.
It's a changing market for sure, and
it is.
You got to find your niche, right? And if your niche is single family homes and you're really good at it, go for it. Run full speed, because you're still going to do well if you operate at your numbers that you're comfortable with, within what you're comfortable doing, then you're going to be fine.
Yeah.
We're comfortable renovating mobile homes. We've gotten pretty good at it. That's what we're comfortable with. That's what we'll continue running towards.
Yeah.
Let's talk a little bit about the mobile park homes. And they're just like, I really don't know much about it. I have become more weary of like C-class in general, just with the age of the homes,
higher vacancy,
the income of the tenants, and then, because there's just risk there.
Yeah,
there's just risk there.
For sure. It's definitely a lot more unstable.
Yeah.
When you're dealing with the tenant class that might be a little bit more blue collar, that might be affected by recessions in the economy a little bit more than, say, a doctor or a lawyer that's always going to be busy.
Moving their rent $50 might
it's
convince them more than a higher class tenant to move, or you raise the rent $25 to $50 in San Marco, people are going to be like, okay,
I don't have to move, and I was expecting $100.
Yeah, exactly.
So this is great, but you change the price on a Class C tenant, it becomes a higher variable for them. $50, that might be that's their gas budget for the week just to get back and forth to work.
Yeah,
they might say, okay, if I'm going to increase it by $50, I'm going to move closer to work, do something like that to cut an expense somewhere else. So you always have to be cognizant of that, but you also have to be, in the same token, we're very cognizant of not over renovating, over developing, overdoing any of the process. Like, everyone deserves a clean, safe place to live, and that's what we aim to provide. Clean, safe, everything works. You're not, your stove works, your refrigerator works, your heating, your air, everything is the way that it's supposed to be, and it's a good experience for them. And if you create that stability in their housing, I think that creates stability in their lives so that they can feel comfortable going to work every single day and they're not stressed out. That's kind of what we aim to do.
So you buy a lot, like a zoned lot for mobile park homes. That's how it works?
There's a couple different ways to do it. So the park-owned homes is our primary model. So you buy, it's basically, it can be one parcel, it can be 40 parcels of land that is zoned to have X amount of mobile homes or X amount of single-family residences. Yeah. And then there's different lot requirements for a single wide versus double wide versus triple wide or anything like that. But basically you have, it's almost like a little neighborhood, and then you go in and you either own the home or you lease the land to the tenant, and you basically just give them the right to have their home there hooked up to water, sewer, and electric, which they may or may not be responsible for depending on how it's set up.
Is that already built out, or are you guys building those out?
It depends. It really depends on each individual situation in each park. So we might do lot prep, which is basically giving them a nice hard pan pad to put the cinder blocks down to put their house. When the mover brings it in, they set it down in the house, they level it, and they're good to go. Yeah. Then they're responsible for hooking up their water, sewer, and electric and stuff like that. Or it might be, hey, we own this home, let's sell it to you. You renovate it, it's yours, and then you just pay the lot rent.
Interesting.
Is there homes that a developer or company would maintain the ownership of and just rent out to tenants?
So that's our primary model, is we own the home already, and then we renovate it, and then we just lease it out, at whatever the rental rate is for a 3-bedroom, 2-bathroom home, and then we own the home, and then we're responsible for all the maintenance. If something breaks, it's on us. But if the tenant owns their home, something breaks, hey, if it's not with the main connection, the pad or something like that, sorry about it. That's kind of your responsibility, because you own the home, and it gives them some ownership of their property. So obviously, hopefully they're more inclined to take care of it.
Yeah. And at that point, I would imagine a good manager would be like, well, I can do it for you, but at that point, it's a subcontracted service.
It's a subcontracted service, and then we say, hey, this is their price. This is kind of the fee on top of it. Yeah. What do you want to do?
Yeah.
So let's compare the mobile home parks to multifamily property. Like, we're going to see a 28-unit, 50-unit later on today. Yeah. It's a different, it's different, but it's also similar. You mentioned some of the similarities. How do you project on a purchase, on acquiring those properties differently than you would an apartment complex?
At least as far as our process goes, they do a lot more analysis of it, at the quote-unquote corporate office when they look at it. Yeah. But when I talk to them about it, it's very much the same. It's how many roofs are we going to have to replace? What's the rental rate? What's the going rate for a 2-bedroom, 2-bathroom in this area? Yeah. So that the actual deal analysis looks very similar. You just have maybe higher capital expenditures, because instead of you've got 20 units in one building with one roof, you've got 20 roofs. So you might plan for higher expenses like that. You also have 20 different water meters. You've got 20 different electric meters. You've got different things that just operate a little bit differently, but the numbers generally kind of come out the same, because you're still dealing with that type of scale.
Gotcha. Yeah.
So
same type of model, a little different inputs.
Correct.
Yeah.
So I'm thinking
at my level. Now, I'm sure the big boys that own, 4,000, 5,000 mobile home units, I'm sure they have either a very simple or very sophisticated spreadsheet when they look at it.
Yeah.
But we look at it very similar to, an acquisition on a 16-unit apartment building.
Yeah, no, that makes sense.
So I'm curious, just thinking about just what a pro forma might look like, and I know maybe we don't have to dive in that far, but something like rent growth in a mobile home park. So I'm thinking about like rent growth. I'm thinking about like the wealth gap and like the wealth divide, right? And like it's likely on the bottom side, right? So like I don't know if you extrapolate out a B-class property multifamily and you extrapolate out rent growth in 10 years, I'm assuming that's going to charge up a lot quicker than the rent growth projections of a C-class property on the bottom of the wealth gap.
Correct. It's
just
going to be a
talking dynamics,
bit more flat. Yeah, you're definitely not going to see like during the pandemic what you see in 10, 20% rent growth.
Right. More.
I mean, in our property.
Exactly. Well, a little bit different, but you're still going to see a step up over time because you do want to continue to increase the amount just to make sure the tenant understands like, hey, like the cost of us operating this for you continues to go up, but it's going to stay more flat. Like once we get a tenant in, we stay like maybe slightly below what we could get to get a good tenant. And then we want to treat them well. So we keep it a little bit more flat so they don't feel like they're stressed on their budget where they want to make a decision to move.
Sure.
Yeah. I mean, it's so interesting because, we're out of the whole pandemic kind of, era, but you're still seeing rent growth, especially in a lot of the Riversides and San Marcos and stuff like that, of somewhere between like 10 and 15%, where
I think that might
historically...
be Florida. Right.
Well,
that might be Florida in general.
It's Florida.
Yeah.
Minus our college football teams. It's pretty good.
But I'm just, just looking at that over a long term, that's kind of the reason why we got into Jacksonville is because year over year we were seeing like 6 and 7%. And we thought, oh my God, the nation is 3% on average.
Right.
And what a great market to get into. And now it's like 10 to 15, 20 in some years, during the pandemic.
Right.
But 10 to 15 year over year as well. Like that's afterwards.
Word's getting out about Florida being pretty fantastic.
Yeah. So like the influx hasn't really stopped.
No, it hasn't. It continues to go up. I mean, every single day. I don't know the exact number, but I think 1,000 something people are moving to Florida every single day.
And like I think one of the reasons as well, not to get too technical into the numbers, but a lot of the reasons why we've been so pleasantly surprised is because when we underwrite these things, I mean, us, like going through every single line item, and we're so conservative with them because how can you like go to an investor and say, I'm going to guarantee the 15% year over year rental growth rate? Like, it's just not realistic to anybody who knows what they're doing in the real estate space.
And there's, I'm sure, a disclaimer that you guys want to throw in there right there, like real estate's a risky investment, no returns are guaranteed or protected.
Insert here.
Like
we'll
that.
put like a bubble.
Yeah,
above.
exactly. But no, it is hard to project because I don't think it's going to stop in Florida, but it could stop. At any point in time, something could happen, and the rent market can stunt itself and slow down.
Yeah.
But I don't think, especially in Jacksonville, I think the word's getting out that Jacksonville is fantastic. You get everything that you want here.
And it's raw.
What was that?
It's raw.
Yeah.
It's like still, it's being built new.
Exactly.
Not many places are
no,
doing that.
and Jacksonville's a great city. I mean, we've got a lot going for us. The government system in Jacksonville is a consolidated government, so the city and the county are one and the same. So they operate more efficiently than you might find in other big cities like Jacksonville. You can drive 20 minutes in each direction. You're still in Jacksonville. Yeah. You could be at the beach. You could be at the National Forest. You could be on the river. Like, you have everything that you want. Yep. We have a playoff winning
I was just going to say, so you got to bring that in.
We've got that for all the Jaguar fans out there. But absolutely, we should have won against Kansas City. But the refs and Travis Kelce really won that game.
Payback.
Yeah,
exactly.
Payback next year.
No, I was rooting for the Jags until the Giants and the Jags are now my second favorite team. So I was rooting for them. But then as soon as Kansas City won, I was like, I want to see Mahomes win again.
So my wife's a Denver fan, so I have like apparently double hate now for Kansas City because Denver continuously loses to them, and now the Jags can't seem to beat them. But we'll get there next year.
I appreciate the dynasty,
but well, you can just look at the Georgia Bulldogs. That's the real dynasty.
That's your team. I always think of you when I see the Bulldogs play. Always.
But no, Jacksonville's just fantastic.
Yeah.
Like there's just so much going for it. The weather's always fantastic. I mean, it's February. Did you guys go outside yet today?
Yeah, so
freaking beautiful.
We actually jumped in the Atlantic yesterday.
Yeah, it was cold, but it was nice.
It was cold.
The wind was a little consistent.
Can't do that in Jersey right now.
You guys are from New Jersey. It's not cold out there for you guys. For us, that's freezing.
Yeah, I know.
So I actually wanted to talk to you about
some looks on the beach. We were getting some looks like, this guy's really jumping in the water, but go ahead. Sorry.
So no, I wanted to talk to you about that. So a lot of times that I've come, it was during the summer. So it's a different vibe here in the winter and the summer. This is peak season, right? And like I've been here President's Day weekend before, and now same time of year, a couple of years later. But it's different. It's different this time of year. Just wanted to mention to you, like, you've always mentioned San Marco. You were like, I would talk to my wife about potentially moving to San Marco area. And you said that since I met you 6-7 years ago. And obviously we bought in the San Marco area. And we were walking the downtown yesterday. Just, what were we doing? Oh, we were going to get a drink or hanging out, checking things out. Yeah. And I don't know if it's the time of year. I don't know if it's that there's that new building I haven't looked into too much right there that's going up. I think there's a couple apartment like style buildings and like bringing people, but there was a different vibe.
The downtown area, like San Marco, Riverside, and the core of downtown, I think is on the up and up. You've got a lot of continuing development down there. The Laura Street Trio is being, it might honestly be done. I don't follow the downtown stuff as much as I used to. Yeah. But that project's coming online, and then once we get the Four Seasons done down by the stadium,
I can't wait for that.
It's gonna be totally different. I mean, it's gonna be great because downtown Jacksonville. It used to be, and it might still be a little bit, but it's starting to change a little bit. People go in, they go to work, they go home. There's not a lot of reason to stay down there. There's no restaurants, there's no nightlife, and that's slowly starting to change. Yeah. So I think it's great.
What are they going to do with the landing?
They already tore it down.
I know. But like, let's go.
We have a really ugly sign that's supposed to be going up.
We laugh about it all the time. I don't care.
You guys seen it?
Make the.
It's like it says like lax or something, right?
Yeah, it says Jax, but it says Jax, but it doesn't look like it.
It doesn't say Jax.
It doesn't matter. It just needs to be.
It needs to be something.
Just needs to do something.
They do like movies and stuff down there. Like they put up a big screen and stuff like that. I'm sure once the Georgia-Florida game comes next year and it's not there, they'll have that as like a tailgating spot or something, or might do something for the Jags games or something. It's a prime piece of real estate. Somebody's going to snap it up.
I actually saw something, the Related Group, Jorge Perez from Miami, huge developer, was going to put something on the water, I think in Riverside. And then I think it was like a couple of months later, financing changed and he pulled out. Right. And it was like a huge like development. Everyone was pumped. He was one of the top developers in the nation, in the state. Definitely. Right. And then he pulled out because of recent developants with
I heard a little bit about that. I didn't follow it super closely, but
God damn you, Biden.
Fantastic.
I'm not going to get political on this show.
You want to keep it pretty neutral.
We're business owners.
Oh, no, I'm not getting political. I'm just the government raise of the rates in general.
The Fed really is
killing our deals.
Fair.
Yeah. Very neutral here.
Fair.
But that's not politics. That's just bureaucracy. So you can just call it that.
Yeah.
But no, I think the more downtown continues to grow, the more the Jags continue to win. It might sound silly, but winning fixes a lot of those issues.
100%.
And it's an 100%. NFL franchise that a lot of the other NFL owners don't really want in Jacksonville because it's not a huge market. But I think if they continue to win, downtown continues to grow, the real estate market continues to do what it's doing in Jacksonville, they're going to be really happy to have the NFL team here because this is going to be a huge market. And come on.
Yeah.
Let's go Jags.
Yeah. I asked this to our last guest, and I'm going to ask it to you. What, like, downtown, downtown is, like, raw, and it's there, and it's, like, ready to develop. There's vacant buildings you could just tear down in a moment and put up apartment buildings. Like, it's on the river. It's on the water. Like, does it flood and, like, nobody wants to touch it? What is it about downtown? Because there's surrounding areas that are developing, but they're still kind of, like, staying away from downtown a little bit.
Yeah.
Or maybe they're not. We have to try and drive through it.
There's a lot of different factors that I'm sure go into that. I don't think flooding is a huge one. In the 10 years that I did work downtown on the South Bank and on the North Bank, there's only one or two like significantly flooding events that I can recall. I think a lot of it might be some of the restrictions that were around. There was a large church that was downtown that had a lot of the real estate. They've started to go through disposition. I think JWB purchased quite a bit of their stuff.
Oh, nice.
So I think maybe some of those restrictions loosening up will be a big play in getting more downtown.
Yeah.
But yeah, it's housing. There's not a lot of great housing in the downtown area to get in and out. There's not a grocery store. There's no Publix on the North Bank. The closest one is in San Marco, and that just opened, and that was, 20 years in the making. They wanted that Publix there, and they finally built it. But I think you got to do something like that. You got to get like a good. You have to have the housing, and then you have to have the goods and services that the people need to live in there. Because you can live downtown, but then you got to commute 30 minutes out to get to a grocery store and do your shopping and stuff like that. So I think the more that they continue to develop that, we're going to continue to take off.
Yeah. Which, honestly, it's interesting. It especially, like, after the COVID era, now you can order groceries on your phone and they can be delivered. Right. So, interesting to see if, like, that... Very dangerous. I know. I know. I'm surprised half the world doesn't have, like, a DoorDash Gold account at this point. Yeah.
We had to delete it off our phones. Come on.
Oh, yeah.
We got to stop doing this. This is killing us.
It's too easy.
It made it way too easy.
And they knew it. But services like that, can make an area like that more accessible.
For sure. Sure. But I still think a lot of people are going to want to go to the grocery store.
Do their own shopping.
I'm just I need one thing to pick up for dinner, and then you got to have like a minimum order and stuff like that.
Right.
But I'm hoping that continues to take off.
Yeah. Yeah. No, definitely. I remember when we went, what was the name of the steakhouse? What's the name of that steakhouse? Calford. Yeah. When we went to Calford, we had dinner there, and then we were like, "Oh, let's go grab a drink somewhere." And there was not really a spot.
You got to go into Riverside. If you're not going to have the drink at Calford, you got to go to like Riverside. or San Marco
we wound up going to like this cool little spot with like
on the street,
like a fireplace in the back and stuff.
That was a little yeah.
It was by no means a big place, but it was the only like
it was the only place that was
open that
10 o'clock?
10 o'clock at night, 10:30, whenever we finish dinner.
Late.
Yeah, right. And, so.
That's just like in that little downtown area, though. There's like other...
Yeah, there's like
you think of a football stadium and you're like, you think of like, let me think of the ones I've been to, like Indianapolis or like Pittsburgh or like, there's whole...
There's like a whole little community built
around the stadium, whereas like, it's not that much, you'd have to go to other areas.
That's also what makes Jacksonville interesting. It's like almost like, okay, they neglected the downtown for so long that they built around it a lot. And now if they come back in to downtown, it will make like everything's better because it was neglected.
Exactly.
So who knows? It could be a benefit in the long run.
Yeah, you kind of like lay siege to the city and then everybody's just going to move in slowly over time. And it'll be, when it happens, it's going to be tremendous. And I think it's going to happen sooner rather than later.
Yeah, I hope so.
Yeah.
We got to kind of get like wrapping things up a little bit. We have 10 minutes, but is there anything else you wanted to ask? I figure.
You know what? I kind of wanted to dive into the like asset management side.
Yeah.
As far as like tech, because there's so much cool shit happening right now, and like we dove into ChatGPT like 3-4 months ago when it first came out. I use it quite a bit to write all the listings and stuff like that now. How many ways can you say like beautiful renovated 2-bedroom 1-bathroom mobile home? Like, there's
you
like
put it into there.
No
and they
spelling errors, grammatically correct.
Exactly.
Like you don't have to think anymore. It's wild. I mean, I think it moves.
Think about things that are more important.
I think it moves.
Takes care of like the low level thought stuff for you that actually takes a lot of effort.
Yes.
Like a good point. Like a listing description, you want it to come across right. You want it to be grammatically correct and everything spelled right.
Yeah.
Do you really want to spend 10 minutes writing it, then editing it, and then saying, "Oh man, I used this word 3 times in the span of 2 sentences. Like I got to change that," and then that just takes care of it for you.
I think effectively what it does is it moves all of the busy work that was, hey, I got to get things done. It was at the top of the kind of food chain to get all that stuff done and present it. Now it takes the creative side and puts that to the top.
Exactly.
So now you have to be creative enough to prompt it. Like there's going to be probably ChatGPT prompting jobs rather than copywriting jobs that are just pounding out reviews.
Exactly.
No, we want someone who knows how to get the most out of it.
Exactly. Like what keyword do you trigger in ChatGPT to get exactly what you want out of it? No, I think that's a fair point.
Exactly. So kind of in that realm, have you seen anything on like the asset management side, like technology wise, or just same old song and dance?
So on the asset management side or property management side, like I've worked with Appfolio, Yardi, Rent Manager. That's what we use. The programs themselves are always changing and adding in new features and stuff like that. I think just finding the program that you feel comfortable operating on that side of things is the best, and then stick with it. Like you don't always have to be chasing the next shiny thing with your management software,
right?
Because the more you change it, you got to change all your GL codes. You got to change the way your maintenance is structured. Everything that's already like pre-built, and that you spend a lot of time on the whiteboard. Like, hey, if X does this, then I want the system to respond with Y.
Yeah,
and then changing to the next shiny thing. Yeah, that system may overall be better, but what amount of time are you going to lose trying to transition to it? What deal are you going to miss because you spent 6 months trying to change your software, and it just doesn't do it exactly the way that you want? The report looks a little bit different. You can't find the one number that you really need to get to before you walk into a meeting. Yeah, you got to stick with something that's consistent. It gives you what you want, and test them out. I mean, I think all the big softwares give you I'm sure like a 30-day trial or something like that.
I mean, for us, I definitely see that in the future. Mm-hmm. Eventually when we probably branch into asset management after having so many units that we want to raise that kind of leg, that branch up. But yeah, as long as you have all your KPIs where, it's driving your decisions, I think that's really all that matters. But I was just interested to see if anything kind of popped up in the space where it's just like, wow.
Like there's a robot really going to each apartment and like,
that would be nice.
Or if someone has a maintenance request, like AI is guiding them through how to do something simple.
So a lot of the softwares have like some plugins that you can activate that'll do that. And you go in on the back end and say, hey, if the tenant asks a question that mentions plumbing, it sends them to this list of 10 built pre-responses, and then asks them some more prompting questions. But we haven't done a lot of that. We're pretty hands-on with all of the tenants and the residents and the vendors, so we like to have a lot of that interaction.
Yeah.
But once you get to a certain scale, that won't be feasible unless you have a huge staff, which then cuts into your numbers, it cuts into your profit.
Yeah.
So there are definitely features that we should probably explore some more, which I'll probably go back to my office now and look at them now that you're mentioning it, because I know it's sitting right there in the software. I can see it in my mind on the screen. It says, chat button. I'm like, I should probably figure out what that does.
Well, you think about it too, like we always kind of, there could be, 100,000 other investors just like us, definitely more. What can we differentiate ourselves? What can we put Elevation Equities like above the rest? Like, oh man, you got to go to one of their homes. They have X, X, and X. And I always say, like, what if all our homes are super integrated and smart homes, and you just literally you give them access, and now they can lock and unlock the door, they can turn on every TV, this, that, blah, blah, blah. And one of my our very close friends, our friend John Carter, he has his own like audio visual thing going. So, it would be and he's also an investor with us. Right. So like, it'd be very easy to
shout out to John.
Yeah. I always think of kind of value adds like that to try to give us a leg up, but I mean, I doubt they're installing like Apple iPads in the side of mobile home.
Not necessarily. Like I said, our biggest thing is clean, safe. Like we want everything to function. But a lot of that, like an app, like a good resident app, goes a long way for people. Like where they can easily get a hold of someone. Like you want to talk to a live person. Like, hey, my ceiling. Example, we had one of the second floor apartments, right? The pipe that feed the toilet supply line, whatever you want to call it, I'm sure there's a technical term, busted loose on the second floor. Yeah. Could not get a hold of the tenant. The guy that was there was cutting the grass and said, hey, it looks like there's a bunch of water running into your downstairs unit. Could not get a hold of it. The lady logged into her app, submitted a maintenance request. It flew to 5, 6, 7 different people on their phone.
Yeah.
We were there in like 5 minutes, shut down the water. We were able to get it solved. Obviously, it caused a lot of damage, but like the communication software, I think, is the most important thing. So like smart connected home in Riverside, that works out well. That probably draws some people in. But just like the basic communication stuff for everyone in any class, like, hey, my stove's out. Getting that to the maintenance guy quickly and having the issue solved within 24 hours. The biggest reason people leave apartments and homes and everything that they're leasing is maintenance. Like by
you hear it all the time.
Hey, I'm leaving because I moved in. I asked them to fix this. It's still not fixed a year later. I'm leaving.
Yeah. So what you're saying
yesterday? What did that lady say when we went? We went to a property and kind of was just walking around. A couple tenants happened to be outside.
16 unit in Orange Park area.
Yeah. So the first thing the lady said was what?
I asked her, how do you like living here? She said, it sucks.
Yeah.
I said, why? I was like, well, some super came in, supposed to fix it up, and never did.
Yeah, they never show up.
Yeah.
And the biggest thing is, we log everything. So the calls come in, those are logged. It's logged in the system. Like, we always want to know, like, where's the bottleneck? Like, why did this not get fixed? If the tenant requested something, where was it? Did we stop it because we said, hey, that's not an urgent issue today, and then it slipped through the cracks, which happens. I mean, it's going to happen to anybody.
Yeah.
But like a big maintenance issue, or if it's an ongoing thing, like they have like 5 small things that you never fix, they're gone. And they're going to say that their property sucks. They're going to leave you a bad Google review, and then you're going to have to turn over the unit and fix the stuff anyway, and spend more money to renovate it and lease it out.
So let's wrap things up, but let's use that because we only have a couple minutes.
Yeah.
So to a new investor, somebody who's interested in investing, at whatever level, passively with us, somebody like us, a sponsor, an operator, somebody who wants to go buy a duplex or a single family and rent it like we started. You're obviously saying like property management is very important.
Yes.
So let's give the beginning investor advice on maybe like don't manage yourself to start.
No, managing yourself is a crash course for disaster, honestly, because a lot of property managers have to go through and learn your property and what the nuance of it is. Just because they manage the one next door doesn't mean that your property is going to operate the same way. Right. So like new investors, interview your property manager, interview your banker, like interview these people like you're hiring them for a job and you're the CEO of a company, because you are. It's even if it's one house, you're the CEO of that house. Like, make sure that the person that's running your company is going to do the right thing. Yeah. And interview more than one and pit them up against each other and just say, hey, like this guy says that he's going to do this. What are you going to do? Can you match it? What process do you have in place that's better than his?
Yeah.
If anyone wants to reach out to us too, I have like a set of 20 questions for property managers that would like cover everything and make you seem super intelligent when interviewing your
Definitely use that. Definitely use that.
I can even like post that or something.
Yeah, put it in the show notes or whatever.
Is that checklist on our website?
Put it in the show notes.
Is that checklist on our website?
No, that's not. That's for passive investors.
That's for syndicators. Like what you should ask about your syndicators and your property, not really the managers.
I have a list. We'll put it in the show notes. We got to figure that one out.
Yeah.
We're just shooting from the hip, Corey.
I heard that said on a couple shows. Yeah, we'll throw that in the show notes.
Yeah, no, that's good.
It's your show, so I volunteered you to do something.
We were joking. We're like, subscribe. Click on the... I don't know what we're doing.
Hopefully we'll get it there.
No, this is great. And you guys are great. I know you guys are both, super dedicated to what you do. So, anyone that's listening that finds value in anything that I said or that you guys said, like, feel very comfortable with Eric and Rocco. They're real guys. You guys do a phenomenal job. I know you're going to take care of your investors. So, you guys should feel very comfortable with what you're doing.
Appreciate that.
Yeah, absolutely.
It means a lot, man.
Where can people find you?
Ooh, that is a fantastic question.
I know. I've never practiced that myself. Luke, he was good.
Luke was great.
Boom, boom, boom. Yeah. I have a LinkedIn, Corey J. Clarkston. I'm not on Instagram or Facebook or anything like that. I let my wife tell me when all my nephew's birthdays are.
Nice.
So if that changes, I'll
give smart. You don't have to remember anything.
Exactly.
Give him your cell phone number.
Yeah. Maybe not.
All your tenants will find them.
We have a management line for that.
There you go.
Personal phone number. You guys have that.
Yeah.
And what's the company name again that you work for?
So it's Rise Communities, RYZE Communities. You can find that company at risecommunities.com.
There you go.
Very cool.
Good stuff.
Yeah. And I guess we should say where you could find us, right?
We might as well, but I'm not really sure.
No, so elevationequities.com, IES, everyone asks that. Equities, IES.
On Instagram.
And then basically through that, you can find our Instagram is at Elevation Equities. Our Twitter's at Elevation EQTS. And we'll have that all.
Yeah, it's
obviously
all on the website.
On the website, linked
in the show notes.
New.
Yeah.
Yeah, he'll be in the
show notes. Yeah.
Yeah, website's new. Looks nice.
Yeah, I checked that out the other day. You guys did an awesome job with that. The portal, everything that you guys set up. I mean, it's top notch. I mean, it's high level stuff. I mean,
now we got to get some
offerings
on the portal.
There you go. That's the next key.
The pilings are in. We're ready to scale.
Yeah. Absolutely.
Ready to build up.
Exactly. But yeah, thanks a lot, Corey.
Absolutely. Thank you guys.
Really appreciate it.
Awesome.
This is great, man.